Hello and welcome to the Forex Form Guide, where we take a look at the major currency pairs through the lens of WD Gann analysis. I've subtitled this week's episode, Missed It by That Much, or Did I? Now for the younger ones amongst us, which used to be me, funnily enough, not quite so much anymore, I'm of course referencing the classic TV show Get Smart, and the Missed It by That Much refers to the Australian dollar, US dollar, top from last week. Now, when I say top, I mean the high price of the week. I am looking for a crash on the Australian dollar. We're going to talk about that. In fact, most of tonight's episode will be devoted to the Aussie dollar, US dollar, and where we're at with that. I know that's of interest to a lot of you. However, even if you're not super interested in the Australian dollar, I'm going to be walking you through step by step how this week unfolded on the Australian dollar. And if you're a Gann trader or you'd like to be a Gann trader, there's some pretty useful stuff, I think, in that discussion that's going to help you no matter what market you trade. After we do the Australian dollar, US dollar, I'm just going to briefly touch on the pound, the euro, and the US dollar yen, but I'll turn out they were sideways all week. I think the pound close was 17 ticks different to last week's close. The euro was 34 ticks and the yen was 16 ticks. They were flat moves all week. The Aussie, there was a bit more going on there, and we're going to delve into that in just a moment. Before I do that though, if you're new to the channel, welcome. My name's Aussie Dollar Man. This channel is dedicated to the works and teachings of the great WD Gann. There's some videos here if you want to get up to speed with Gann and his work and some of the things that you can do with that. And if you do find value in this or any of my videos, I'd really appreciate it if you can click the like button, leave a comment, and subscribe to the channel. It does help me to grow the channel and push Gann's teachings out to more people. Before we get started tonight, a quick disclaimer. As always, this video is for educational and informational purposes only and should not be considered financial investment or trading advice. Bottom line there, do your own research. This is not financial advice. Trade responsibly. So we'll start with the Australian dollar, US dollar. Obviously, I've been talking about this market for a long time. I mean, what do you expect with a name like Aussie Dollar Man? But ever since this channel started, I have been talking about September 2025, where I expect a big, strong down move on the Australian dollar. First, let's take a quick look at where we're at. If we look at the monthly chart up the top here, you can see it's not really in position for a crash. The August bar will go down on the monthly chart as a down bar there, but it certainly doesn't look like a market that's just going to collapse just based on the monthly chart there. Similarly, on the weekly chart over here, we had an up week, and that leaves us with double bottoms on this 50% retracement of our September to April run down. So we're sitting on top of 50% now. So again, it doesn't quite look like it's in a position to crash. The market has broken above both the 1/8 line from this first range down here and the trend line from the top there, from the top to the lower top there. Now, markets can false break trend lines and then come back below them, but it is just starting to show a little bit of strength to the upside there. So last week was all about watching for an opportunity for a short trade. I saw a couple of those opportunities and took two of them, resulting in a break-even trade and in a loss. So obviously not the week that I had envisaged, but I still think we're very, very close to this next run down in this market. And as I said earlier, I'm going to walk you through blow by blow what happens this week. I'm going to share my thoughts, how I saw things, what I needed to see happening in the market, the areas that I was targeting, and what I'm planning to do next. Before we get started though, I just want to quickly revisit the forecast. It's something that I published on the 24th of December last year, 2024. And it was this video here, Australian dollar crash forecast. It's coming in 2025. What did I say? I said, I believe we will see a major crash on the Australian dollar during the month of September 2025. Well, tomorrow is the beginning of September 2025. This is based purely on WD Gann's cycle work. So this is nothing to do with the fundamentals. It's nothing to do with the CPI figures that came out last week or other economic data that may come out this week, or whether a war breaks out or escalates or anything like that. This is purely based on Gann's cycle work. Now, this is a bigger picture cycle that I'm dealing with here. And the way that Gann cycles work is that you have to tie them in to smaller cycles. So you have cycles within cycles or wheels within wheels. From time to time on this channel, I do give out my smaller picture cycle dates that I use to tie in with these bigger picture dates. Again, in December 2024, on the 18th of December 2024, I gave out 3 months worth of those forecast dates. And I want to quickly run through them with you now, just so that you get a quick idea of how this stuff works. So here's the forecast as I gave it out. Now, it was on the 18th of December that I published this video. So you can imagine that first date had already come out, but I needed to go back and show you the anchor point. So you start, and these are high-low cycles, meaning that we go from a high to a low to a high to a low. So I had 13 December as a high. This was 2024, down to 20 December low, 26 December high. If we look at the chart, 12 December high, 19 December low, up to 26 December high. Now, this period here was sideways. In fact, it was a bit of a precursor for what was to come for the next few months and most of this year really on the Australian dollar, that was quite sideways. But coming up from that low there, the market didn't really start to head back down and break that low until that point there. So the 26th December is the cycle high. These points, they are what Gann called mathematical points of force, and they are forecastable in advance. Gann used multiple pricing systems to do that, but that was the beginning of the forecast there in January. And keep in mind, these were all given out in one chunk on the 18th of December 2024. At that point, I gave for January 3 January low, 8 January high, 15 January low, and I earmarked that as an intermediate low in this market. So I said around the 15th of January, not just a small cycle low, but an intermediate cycle low as well. Keep that one in mind. Up to 21 Jan high, 29 Jan low. Let's see what happened. We had the 2 January low as expected. Up to the 6th of January, the date was actually the 8th, which was this one over here. Probably the 7th is where the actual top was. You can see even though the market made a top here and came all the way back down here, it actually ran up and got very close to that top there. So there's probably your mathematical point of force there on the 7th, running down to the 13th, and that ended up being an intermediate low, as you can see running up there. Now, this work, I didn't invent this work. This is all Gann's work. I had some help putting it together, and I did a lot of work to put it together as well. But it's taken from the tunnel through the air, and I'm showing it to you for a reason. Obviously, one of those reasons is to show you that it does work, but another reason you'll see in just a moment. I had the 21st of January for a high and the 29th of January for a low. Let's go back and review that. 21 January high, 29 January low. We had a 20 January low. We had a 27 January high. What's gone on there? There's been a polarity flip. The dates are still working, but there's been what's called an inversion. Now, obviously, I'm not going to go into all of that and the mechanics of that, but you can have a bit of a look at that and see where that might have happened. So far, December, January, the dates have been pretty good. Let's have a look at February now. We had the 3rd of February for a high, 10 Feb for a low, 16 Feb high, 24 February low. Remember though, and I said this in the video, the polarity did flip in January. So this high just becomes a low. So the dates remain the same. It just becomes low, high, low, high. So it becomes a 3 February low and a 10 February high, etc. Well, there's your 3 February low, bang. 7 February high. We were looking for the 10th. If we go back there, 10th of February. The 7th was a Friday, the 10th was the Monday there. 13th of February, we were looking for the 16th of February. That's come in 3 days early. I treat that as a miss. You're expecting a low, and you can see there's your high. And this is where the market has to run down to in price. And you can see we actually hit that target one day after the top on the Monday. So it didn't have very far to go. It's done that. Now it just sort of mucks around and kills time until it gets to that cycle point, and then off it goes from there. So again, 3 days early, but you were looking for a low around there. And if you have the price systems working, you know that that's where the market's going to. From there, we went up to the 24th of February as expected. Again, the extreme top was the 21st. That was a Friday. This is a Monday here, but that's where the market ran down from. Yes, it made a top there. It ran down, but it got almost all the way back up to the top there before it started heading south. Finally, for March, I had the 1st of March high, obviously the polarity flip that we had. There was just the one inversion that we had there, but that becomes a low, high, low, high. So 1st of March, low, 8th of March high. What did we have? We had the 28th of February. That's the last day of February as a low. There was a slightly lower low there on the 4th of March, but I believe that's where the cycle low came in on the 28th. Up to the 6th, down to the 21st, up to the 26th. Now, all in all, not a bad forecast, particularly considering that this was a very sideways choppy market. It's a 2-cent range, basically, for the majority of that period. It's very, very sloppy, sideways market. Now, there were some good trades during that period of 10 to 1 and more, but overall, it's not the best period of trading that you're ever going to see. But this is Gann's cycle work in action. And keep in mind, this is only one cycle. This is a small cycle. You would overlay on top of this a medium-sized cycle and a large cycle. Or as Gann says in Tunnel Through the Air, there's always a major and a minor, a positive, a negative, and a neutral. But I bring this 8-month-old video up just to point out a few things about Gann cycles, because people like to show you the times where they work perfectly, but it's not always perfect. Number one, you get these things called inversions. So you get a polarity flip, as we saw in January. The dates kept working. It's just the polarity flip from a high to a low. Once you recognize it, it's easy. You just replace your highs with your lows and your lows with your highs. The forecast continues on. But what else is there? Number one, occasionally you'll miss by a few days. The dates that I gave out were raw dates, let's say, and you do fine tune those so that most of your turns are nailed down to one day either side or the day itself. So it's a tight trading window, but you do get a miss from time to time. So you've got inversions. You can also have a miss from time to time in the market as well. You can have a cycle date coming in and then a false break of that low over here. And this is where form reading skills, I sort of go on about this on the channel a little bit, but Gann taught form reading as one of his first lessons, how to read a bar chart, how to draw a swing chart, how to form read a market. And you need to have those skills. A great place to go is section 2 of how to make profits in commodities. Another great place to go is Safety in the Markets Active Trader Program. That's where I learned most of this stuff from. Another challenge here with the cycle, 6th of March. If I told you on the 6th of March, we're going to run down to this price point on the 21st, well, that's where the market ran down to. But in the meantime, as it was running down, we had that spike up there that took out the 6th of March. In a choppy sideways move, these things can happen. From a Gann student's point of view, what you need is from this top here, you need to know how far the market is going down. Because if you know that that's where the market's going, you can see 3 days after the top, we've hit that point there. So number one, you can take profits there. Number two, when the market spikes up here, you know it still has to get back down to that level because that's the mathematical point of force that the market must go to. And you can get a second trade running out of that point as well if you want to, okay? But that's a really good example of how Gann cycles work. You've got the small cycle here. You can probably guess where some of the larger picture pieces are. There's an example, as I said, of an intermediate low there, so it's a bigger low. So again, you take these dates and then you apply them as Gann did to all of your swing chart timeframes. They're going to show up and give you turns on the daily chart here, but you don't just trade the daily chart in isolation. You keep an eye on the weekly chart for your weekly trends and then your bigger picture monthlies as well. I don't really watch the yearly so much anymore. Back in Gann's days, he would watch the yearly, monthly, weekly, daily. I tend to watch monthly, weekly, daily, and 4 hour as my 4 main go-to charts there. But that's a really crucial step, looking at all of your charts in combination rather than looking at one individual time frame. I show you an example of how you can use those charts side by side to take a trade here on this video at the top of the channel there. You might like to check that out if you haven't already. That was a 16-to-1 reward to risk ratio trade in just 2.5 days. I actually banked more than 16-to-1 on the trade, but the initial entry was a 16-to-1. And you can learn more about the wheels within wheels concept in the Gann's Gold series part 2 on this channel, Wheels Within Wheels. So let's get back to the Australian dollar. The big picture cycle date that I'm looking for the crash to begin from was the 31st of August. I've been looking for that since last year. Here we are today on the 31st of August. But these bigger picture cycles can have what's called orb, where you've got a bit of slippage on the date either side that can come a bit early or late, of up to 7 days at times. So what you need to do is tie that into the smaller cycle dates that I was showing you earlier. Now, on the Australian dollar, US dollar, I've been talking for the last week or two about the smaller cycle dates and where we might lock on to this bigger picture top. My smaller picture dates, I had the 21st of August for a low, the 27th for a high, and the 6th of September for a low. Now that was a Saturday, so I expect that to come in on Friday the 5th, maybe Monday the 8th, but probably Friday the 5th. And the next one after that would be the high on the 10th of September. As I said, I see a large cycle high on the 31st of August, and this should align with either the 27th of August or the 6th of September. Now, as a high, 27 August high there makes the most sense. However, if I have missed an inversion, well, obviously that is going to be a 27 August low and a 6th of September high, and it would be the 6th of September, or the 5th probably, would be the high, because the 8th would be too late for the 31st of August for a high, so it would come in on the 5th. But these are the two key dates to keep in mind. 27 August high, that's the one that I like, and 6th September low there. If I'm wrong, then there's a very good chance the 6th of September, or the 5th rather, is going to be that high that I'm looking for, and that will begin the crash down. Now, last week, on Friday the 22nd of August, that's where the market ended. We had a low there. I was looking for a low on the 21st. We got that low. Extreme low was the 21st, but the market started up on the 22nd, so I'm pretty sure that's the cycle low there. And then running up to the 29th, I had the 27th, where you actually do have a low here on the 27th. So if I've made a mistake somewhere, that could be a 27 low there, and we can look back at that and see a 5 September high. And depending where that comes in, if there's a good strong setup there, I'm more than happy to trade that 5th of September. It doesn't bother me. Being wrong in the market like this doesn't bother me. With this smaller cycle here, if I'm wrong, I'll just say, okay, I'll check the next date. You know, there are 4 to 6 of them per month. So you know, on average, you've got one coming within a week or so. So as it stands right now, I could be right, and that could be the top, the 29th of August. I have the feeling it's not. It feels off to me. When you connect the pivots up, a lot of the time, you'll see harmony with the line there. There's very little harmony on this line here. I don't think the top is there. And then I have my own price forecasting reasons, which I'm going to share with you, that I don't think that that is the top either. So it hasn't quite been the week that I was hoping for on the Australian dollar. I thought we'd see the top 26th, even 27th, and that the market would run down strongly from there, and that I'd be talking to you about being short right at the top, and the market's down here now at the end of the week, and off we go for the next month on a wild ride. But it hasn't eventuated that way. But rather than just saying, oh yeah, we'll see what happens next week, I wanted to walk you through how I saw the week, because I think for some of you, there's a lot that you can learn from it. So here's where we were Friday, the 22nd of August last week. That's a week ago. You can see on a daily swing chart, if you know how to draw a daily swing chart, there's a daily top running down to a low, swinging up to a high, down to a low, up to a high. Okay, that's how you draw the swing chart there. Again, you can learn that in Safety in the Markets Active Trader program. Gann teaches you swing charts. It's a pretty basic set of lessons on swing charts. I found the Safety in the Market stuff better. That's where I had all my training through before I got the Gann cycles from Tunnel Through the Air. I learnt swing trading first, which was a massive, massive advantage for me. But looking at this, what you have here is an upswing. What you have here is an upswing. The trend is down. You've got a top, lower top, lower top. And the swing bottoms are lower as well. So lower tops, lower bottoms. But this run up here that we saw on Friday last week, that's run 200% of the last daily upswing there. That's an overbalance in price, and it's an early warning indicator of a change in trend. And that's a really cool Gann technique that he doesn't get a lot of credit for, but that tells you that the trend has likely changed. Now, I was still expecting a top to come in, but this gave me a massive head start for the week because my date was the 27th of August. That was a Wednesday. I knew it almost certainly wasn't coming on Monday because we've got an overbalance here. We at least need a down day. Now, that down day probably wasn't going to happen on Monday, so it would have to happen on Tuesday. And I'm seeing this all on Friday of the week before, all from this overbalance here. So I was relaxed about it, and that's a really big benefit in trading if you can be relaxed going into a turning point as well. If you know, oh, okay, there's a bit of a window here, but I've got to wait for the form reading to give me a signal before I get into the market. Well, it stops you from being glued to the screen 120 hours of the week because FX is open 24 hours a day, 5 days a week. It's 120 trading hours. You don't have to be glued there because you know a few things have to happen before it's game time. And here, I knew there was going to be a pullback. So as the week started on Monday, I was targeting this 65.30 area because we had the trend line coming down from the tops and it's a 75% retracement there. I thought I'll look for a cluster of pressure points around there. I did see on the Monday here, we ran down to 37.5%. And then on the Tuesday, we made a slightly lower low there. But on that 37.5%, Gann says tops and bottoms become halfway points. So if we're running from this low here, halfway to that 75% point, we've got little double bottoms here. And I thought, great, we're heading up to that 75% milestone. I'll start watching for price milestones around there. So at this point, this is Tuesday's bar, the 26th of August, but you don't see that until Wednesday, the 27th of August. So basically, I've sat out for most of the start of the week, Monday, Tuesday. I'm fresh on the sidelines. I'm keeping an eye on the charts, the daily, the 4-hour, the 1-hour chart as they unfold, but I'm not glued because I knew something like this almost certainly had to happen there. And it did happen. So Wednesday, I start looking for potential trading opportunities. And I saw this at 11 a.m. on Wednesday morning. We shot up, we took out the high of the previous day. So we made a new daily high and we hit a 100% range there from this low down here. And we hit the 1x4 angle from the top there. So if you take the pitch of the market from the top down to that low there and you swing it up there, this line is running at half the pitch that the run down to here made. That's a third, that's a quarter, that's 1/8. So often on the Australian dollar, you get tops and bottoms on either the 1x4 or the 1/8. So the 1/4 pitch or the 1/8 pitch. So I saw that. I didn't like it, okay, but I saw it. You had double tops there. Basically, it's a little bit messy, but basically double tops. You got the 100% there. And it pierced the angle briefly and then came back below it. This was when the CPI figures came out on Wednesday. The CPI was higher than expected, which meant that rate cuts were probably off the table, which should mean that the Aussie dollar goes a little bit higher, all things being equal. So when the market came and closed fairly weakly there, I started thinking, what if that's the top? There's a little bit going for it. We're right on the date. I wasn't married to the signal, but it wasn't a bad one. So I thought, okay, if we break this low here, I can take a trade with about 17 points of risk. So I put an entry down below there. I put a stop loss above the top there. And that's a swing turn down in the market that would swing me into the market. Now, I got triggered on that trade, and it started off really well. We had a run down here. We took out a little swing low there and a swing low there. Then we had a weak retracement up and an expanding range down here. That all looked really good. However, because of the size of this entry bar here, my entry is down here. Now, there is a chance that this market can run down here and it can still just come up and touch my entry point there. Okay. And in that case, I would be stopped out of a move for a break even, but I'd be out of the move. So I wanted to move my stop to break even. I thought long and hard about doing it, but I thought, no, I've been waiting a long time for this move. I'll give it a chance to breathe. I'll give the market a chance to have its pullback, which it always does at some point, and have a pullback. Unfortunately, there's the pullback there. The pullback just went straight up, bang, 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 and I woke up and I was out of that trade for a loss. And in hindsight, I can look back and say, gee, I should have moved my stop to break even. But I can appreciate that I made that judgment call. I didn't move it. I normally like to move to break even within 24 hours of the trade being taken. So I would have done that the next morning. It wasn't to be in that case. So I had a loss there. However, that's new information for us. We now know that's a daily swing low. We've run up to a new high here, and that's a big expanding range. So the market has to show some weakness and potentially show a price cluster before I can look to trade it. So going into Thursday, I wasn't trigger happy, ready to just short anything that I saw. I'm watching for a setup in the market, and that's a really big key. There's two main ways that Gann teaches you to take a trade. One is a swing trade. So here, you would draw your swing chart down to the low, up to the top there, and there's a first lower top there, and you can enter as the swing chart turns down, confirms that lower top. That's one way of trading. Another way is when you've got a series of prices all coming out at the same level. It's called a price cluster. They're the two main ways that Gann teaches you to trade in the market in terms of entering a position. One is swing trading, one is price forecasting. Here, I don't have a swing trade and I don't have a price forecast either. So I'm sitting on the sidelines watching and I'm wondering, well, what next for the market? We stopped on the 1x4. Maybe we'll stop on the 1x8 as well. So here we were. This was Thursday morning. I've just shown you Thursday morning on the hourly chart there. This is what it looked like on the daily chart. I say Wednesday because that price bar there represents Wednesday. It's a 24-hour bar representing Wednesday's price action, but I'm viewing it on the Thursday morning. I'm still looking at that area there, but if that area, that 65.30 is going to work, I should see price locking on to that level. And you apply your price forecasting from Gann's form reading lessons, or if you've got it from Safety in the Markets Active Trader Program, which I think is actually better than Gann's lessons on price forecasting, at least at that lower level of price forecasting. Gann taught some stuff using market squares, and I won't say too much about them, but it blows anything else out of the water. It blows a hole through the random walk theory. If random walk theory is the Titanic, then Gann's market squares are the iceberg that hit the Titanic. They just completely remove. You will never think markets are random again when you start seeing them. But I'm looking at this, I'm thinking, if that's going to work, and 75% on a trend line, there should be one or two more pressure points coming in there, and if that's the case, then I think that's likely to be the top. One thing I didn't like though at this time, and I'm trying to tell you how I saw the week unfold little piece by little piece, because it's easy to look back and say, oh yeah, you should look at this, this, and this, but it's not always so easy as it's unfolding. But what I noted here, this is when I started to get a little bit uneasy about my top forecast, because you've got a 2-day swing down here, a 2-day swing up here, and then 2 days down here. 1, 2. Technically, this one went up first, but for all intents and purposes, I'm treating that as a 2-day swing low. Then you've got one more update, which you're going to need to get up to this point here. That's going to confirm this low here as a 2-day higher bottom. And again, that's a bit of a sign of strength there. So I was a little bit uneasy about this. And my uneasiness was not put to rest when I ran my ranges and I didn't see anything coming out at 65.30. Now here, you've got a run up, pull back there. The 100% target is 65.52. Now we hit 65.48.49 late Saturday morning, so the Friday bar. That's where the title of the episode, Missed It By That Much, comes in. But did I actually miss it? Because as I've mentioned on the channel before, the 75% retracement on the Australian dollar acts as a little bit of a point of no return. Once the market exceeds a 75% retracement, it normally doesn't come back. It normally takes out the top. So if we're running from this top down here, 75% retracement is there. If we significantly exceed that, most of the time it will go to that top and take it out. Now that top is 65.68 there, and I thought it looked pretty good, but it looks like it's probably going to be taken out, but we'll get to that in just a moment. So they're on this 2-day swing here where we hit the 50% very quickly. The 100% is up there at 65.52. But if we get up there, it's starting to push the barriers and it will probably go further and go up there. So I've been in two minds about this, but that's where I liked the target. On Thursday, we ran up and we just touched that 65.29 level. We did go a little bit through there, as you can see over here. At 10 p.m. on Thursday night, we hit a 100% repeat here, and see that came together on the 75% milestone and on the angle over here. However, at the same point, there's the 100% of this milestone, but the 200% is bang on that 65.50 level, which is the 100% of this range over here. So all of a sudden, you've got a few ranges all coming out at that level, and I really didn't like this one here. I did take a trade. I had a little bit of a looser stop loss on there. The market ran up and then came below there. I thought, oh, okay, maybe I'm right. Then it gave a lower top and closed back down here. And I thought we're set up to run down from there. And then it just mucked around sideways through here. I had placed my orders a couple of ticks above 65.30. I didn't get stopped out. I ended up closing the trade here because it just didn't feel right. It was above there, came below, and then was back above there. And then it was just sitting there looking like it was ready to take a run off to the upside. At this point, I realized if that was going to work, that's a pressure point, 100% repeat, 1 by 8, 75% milestone there. It should run down. It's not running down. And I exited the trade there for basically a break even. And they were my two trades for the week, those two areas in the market. This one down here, this one up here. Really, it should have been two break even trades. It was a loss there, but that's part and parcel of trading. And they're the two areas that I targeted this week. The third one, I was watching that 65.50. I thought we might come up on that level around 9 or 10 o'clock on the Friday night, which would be an equal range up here. We had 49 hours up here, and then another 49 hours or so up. It would have taken us to that 65.50 level. I think it was around here. We didn't get there. We went a little bit further in time, but we didn't reach the price there. I had set my target at 65.52. So we had 49, 49, and 53. I just set it at 52. We hit 48 at 4 o'clock in the morning, which was around here somewhere. My 2-month-old son woke up, so I jumped up to get him and pass him to mummy, who he actually wanted. And I checked the markets. I saw that we hadn't reached that point. My target hadn't been hit. We're going sideways here. I ended up taking my order off the market. So it could have been a third trade if we'd gone a little bit higher. I took my order off the market. Maybe the top is in and I've missed it. I'm going to look silly. I'll wait for a lower top. If I don't get it, well, that's too bad. But in this case, the market almost always, it's not going to fall short of a cluster like this. That's just in my experience. And I knew coming up 4 o'clock, 4:30, I think it was, on Saturday morning, I know what happens at around 7 a.m. Sydney time as the FX markets close and then open again for the fresh day is the spreads widen. And so I didn't want the market, it was up here, I didn't want the spreads widening and getting me into the market and maybe stopping me out at the same point too, because they can widen quite a bit on particular days. It's very brief, but it can just be enough to get you in and out of a position. And I thought, I'll just leave it. I'll come back and I'll have a look Monday morning. There's a public holiday in the US, I believe, on the 1st of September. Some markets are affected. I don't think the FX market is affected, but there can be some lower volume there as well. So I'll have a look on Monday morning what's going on there. But in some ways, a disappointing week. In others, I look at it and I just think, I handled it pretty well. I'm happy with how I handled it. It wasn't an easy week. Based on my outlook, I did the best I could with what I had. The only really strong pressure point that I saw was this one up here. I still think we'll probably touch that on Monday and it will probably give an opportunity, but it may just pull back and then give us another leg or two up. And we may run up into Friday and that may be the top. I'm not sold. Given that we've broken 75%, we're above the 1 by 8 there. That's generally a sign of a market that's going up. And if we start going up this week, well, obviously we're too far past that 27 August date that I had. So there's a pretty good chance that it would then become the 5th of September high and that I've just made a mistake on the smaller cycle there. So that's how the week finished. The high was 65.48. It was 4 ticks short of the price target there. But as I said, I was uncomfortable with it because of the fact that we've broken now above the trend line, but more importantly, through that 75% milestone quite cleanly. So what do I think is going to happen from here? Well, firstly, the top may be in. Maybe it came in on Friday night. Maybe I've just missed it because it was a few points in which case, missed it by that much. But really, did I? I don't think so. I'm leaning towards the fact that it may be going up. I'm open to a September 5 top. Then again, I'm also open to trading a market that's not so sideways for such a long period of time. It's funny with the Australian dollar. It was a great market to trade. A few years ago, I decided that I wanted to delve deeply into Tunnel Through the Air and into Gann's higher level cycle work. And at that time, I realized with the amount of research that I'd be doing, I couldn't really trade dozens of markets and follow all sorts of markets. So at that time, I committed to the Australian dollar. I said, this is going to be my market. From this day forward, I'm going to be Aussie dollar man. And not long after that, the Aussie has been quite sideways. So not the best time to commit in hindsight, but I don't regret doing that. And in fact, as far as learning this stuff goes, making that commitment, the tips that I will give you, number one, make a commitment. So decide, do I actually want this? Because it's a lot of work and there's a lot of time and money and energy and effort that you're going to put into it over a few years. There's work involved there. But from my point of view, it's just amazing stuff that you see there, and it sort of lifts the veil a little bit behind the universe and the workings of the universe. And you can see the hand of the creator at work here. You just know that there is a higher power involved with all of this, and it gives you a sense of awe about that. But number one is to commit. And then number two, I've spoken on this channel about the expression ask and it is given. That's actually a book by Jerry and Esther Hicks, Ask and It Is Given. The original version of that, though, as far as I know, it's probably an older version somewhere, but I first saw it in the Bible, Matthew 7:7, I believe. Ask and it is given. Seek and you shall find. Knock and the door will be open. But you have to ask. I remember, and it took me a little while, and you'd think for someone who's been raised as a Christian all his life, that I would have remembered to ask and it is given. But I remember going through about 2 or 3 years of research, going through Gann's reading list, his 80-book reading list, and all the Safarial books, all the astrology books, the numerology stuff, the scientific, some of the weird books on there that you wonder, gee, I don't think they have anything to do with trading. That's an odd choice to have on the reading list. But after going through all that, I was committed. Clearly, I was committed. In addition to that, though, I prayed. I said, Lord, I'm not really getting anywhere with this. I need some help. Please send me a mentor. Within a week, somebody appeared in my life, and I got a massive leg up at that point there. So commit and ask are two useful things that you can do on this Gann journey. Anyway, I'm open to a September 5 top. The beauty of the smaller cycle is the next turn is never that far off. So as I said, I really liked the idea of the 27 August top, and it may still be it. That may be it from Friday. If we get a lower top on the 4-hour chart on Monday, I may look to enter on that. But again, it comes down to the reward to risk ratio on the trade. And that's really, really important. It's never just about the forecast. For me, there's the cycle date or cycle dates. You combine them together. Then there needs to be a price setup, as I've tried to walk you through as we looked at this week. Then I need what I call a smart trade, and that starts with the S there, a small risk on entry. Because at the end of the day, if the market falls 1,000 points, great. But if I enter a trade with 100 points of risk, and it's only moving 1,000 points, that leaves 900 points for me, or a 9-to-1 reward to risk ratio for a month's worth of trading. And if you look at the video I showed you earlier on the channel with that double bottom trade, I can take trades like that. They're not always there, but I can take trades like that. A 16-to-1 reward to risk ratio in 2.5 days. So a 9-to-1 trade in 4 or 5 weeks. I mean, I'd take it if it was there, probably, but it's not that exciting to me. I'm looking for small risk entries. I'm looking for good entries into the market. People say your Gann cycles are the most important thing. Others will say your psychology and your money management are the most important thing. They're all important. But for me in my trading, the thing that I personally put the highest priority on is that small risk on entry. Now, I have my own smart system that I use for trading. That's something that I've put together over many, many years and adapted to suit me personally. I'd encourage you to do the same for yourself. Price setups, as I said earlier, I learned that from Safety in the Market. The cycle dates come from Gann's book, The Tunnel Through the Air. That was published almost 100 years ago, which just goes to show how far ahead of his time WD Gann was. If you're not familiar with Tunnel Through the Air, or if you want to revisit it, there is an audio version of it that I have put together on the channel. It goes for just under 12 hours, but if you run it at 1.5 speed, it's about 8 hours or just underneath that. So you can actually do it in a day. But it's a very dense book. It's something that you will have to revisit time and time again. But that's where it's leading. That's the beginner cycle. That's the first cycle that most people will decode from the Tunnel Through the Air. And once you have it for life. The dates just keep rolling on. It's pretty amazing. History really does repeat. Gann says history repeats. You just need to know the correct cycle and the correct starting point. And as I said, this is just one cycle. You layer larger cycles on top of that. Enough of the Aussie dollar, though. Let's quickly revisit the other currencies. Yes, there are other currencies out there, Aussie dollar man, not just the Aussie dollar. The British pound, US dollar, I spoke about this last week. There's a potential double top forming. And I said this last week. I said on the pound and the euro, they look to me like they're heading up. Now, it hasn't headed up. It's just been dead flat. 1, 2, 3, 4, 5 days sideways there. But last week I said it looks like it's going up. And that conflicted with what I was seeing on the Australian dollar. Now, if they do go up, it starts to make a little bit more sense if the Aussie dollar goes up a little bit as well. And you've potentially there on the pound got a nice double top that may form around that 138 level. Or if it goes higher, there's a really nice cluster there just below 149. Similarly, on the euro, not much happened this week. Very, very sideways. If we look at the daily chart there, it's been about 3 weeks now of very sideways action, 3 or 4 weeks. Really, August was a choppy sideways month there. Not much going on there. I've been talking about a price level of 119 for about 4 or 6 weeks, maybe even more on this market. I still see that as a nice pressure point to target there on this market. But in the meantime, you do have potential double tops there, just like the pound. And finally, the US dollar Japanese yen. That was probably the most flat of all. Mirror, mirror on the wall. Who is the flattest market of all? Probably the US dollar yen, at least for last week. But looking at the US dollar yen, I still think that 144 level is a good target to watch on this market, and we may see a rally from there. If and when we do get down, I think these triple bottoms will be broken, and this could have a good fall, maybe down to 116, maybe even lower. Again, if you've been following the channel for a while, I've been talking about that price level probably for the last, feels like the last 6 months, probably the last 3 to 4 months. It's been a long, long time talking about that. So that brings us to the end of a pretty long session there, a little bit longer than usual. I hope that you enjoyed it. If you did find some value in it, just appreciate it if you could click the like button and leave a comment. You can ask a question. Just don't say, please put your whole methodology up on YouTube for free in the next video. It's not going to happen. But if you have a question, if you have a comment, a feedback, I would love to hear it. Let me know what you think on the Australian dollar. Is the top in? Is it going higher? What do you reckon? And if you'd like to keep up to date with my videos, I generally put out 1 to 2 videos per week, usually one, but if I do get a burst of inspiration, I will put a second one out from time to time. And you can keep up to date with those by clicking on the subscribe button if you haven't already subscribed and turning on notifications so that you're kept up to date with the videos as they come out. That's all for this week's episode of the Forex Form Guide. We'll be back next Sunday and most Sundays at 7 p.m. Sydney time with another deep dive into the currency markets through the lens of WD Gann analysis. Until next time, wishing you all the best for the week ahead, all the best with your trading and in life, and bye for now.